And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It's Monday, October the 3rd, the first trading day of the fourth quarter. My name's John Hoagland. Thanks for trusting me with your time. I hope you had a nice weekend. Hope you remembered to pray for those that are in the wake and through the whole hurricane thing that happened last week. And of course, keep praying for peace, not only in the world, but in yourself. As always, this morning, our focus is going to be on trying to find accurate context in these markets. Sometimes it's more of a challenge than not. Always thinking about risk management first and foremost, and remaining patient in our trading. You're probably getting a few hints of a big announcement, a program announcement here at Topstep this week. I can't divulge it, but we're very excited about it, and I'm sure you will be too. So some more beneficial changes for our traders coming from Topstep this week. Hang tight. Stay tuned. As far as economic numbers this morning, 8:45, the PMI manufacturing, construction spending at 9 o'clock. Let me go over the list that's going on this week. Construction spending at 9, ISM manufacturing PMI today. We've got several talking feds. We've got Barkin at 10:45 Central. Esther George speaking at 1:15 Central. And after the close, Raphael Bostic speaking. A lot of the data that's due out this week is going to be related to employment. Tomorrow, we have some early talking feds. Factory orders at 9 a.m., as well as job openings and labor turnovers. So we already start our focus on employment on Tuesday. We also have a couple of more talking feds throughout the day. Tomorrow, Wednesday, OPEC meeting. Lots of news about them cutting some production there. But we have ADP employment at 7:45 Central. International trade in goods at 7:30 Central. PMI composite final. The ISM service index at 9 a.m. Central. And the petroleum status report due 9:30 on Wednesday as usual. We also have another talking Fed, Bostic speaking at 3 p.m. tomorrow. Thursday, jobless claims, the typical jobless claims, initial and continuing jobless claims, nat gas report, and then a bunch of more of talking feds. We have Evans, we have Cook, we have Meester. Meester's not speaking till long after the close on Thursday, and then unemployment, the employment situation on Friday at 7:30. That's going to be the big one this week, of course, and then we've got one or two more talking feds speaking on Friday. So a good focus on employment. Good focus on employment this week. U.S. stock index futures here are set to open modestly higher after posting 2022's lowest close on Friday. Crude prices remain firm, moving higher on speculation that OPEC Plus will indeed cut production by at least 1 million barrels per day when they meet in Vienna on Wednesday. Talking feds aplenty this week. We know that we've got a U.S. economy and markets that continue uncertain and volatile. Watch yourself, and don't forget the biggie this week, unemployment on Friday. The VIX down slightly at 3140 last I checked. Dollar index up slightly at 112.30, coming off that 114 high pretty firmly last week. The 10-year yield holding around 3.7%. And as always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome on the Market Forecast. And make sure you subscribe to our YouTube channel so you can get notified when we do go live. Speaking of going live, we have the recap today. We have the forecast tomorrow morning. We have Coach's Playbook tomorrow. Everybody that knows our good friend Dan Hodgman, his birthday was this week, and make sure you tell him happy birthday when you see him on Tuesday during Coach's Playbook. We've got group coaching tomorrow. Wednesday, no, we got group coaching today. Tomorrow, make Hogue money right after the forecast. Wednesday, group coaching. Thursday, Wednesday, we're going to do a late Make Hogue Money on Wednesday. We're going to start doing Make Hogue Money from 2 to 3 on Monday and Wednesday. So you're going to get 4 days of Make Hogue Money. Hopefully this is going to be something of interest and helpful to your trading. And of course, Make Hogue Money is more about you guys making decisions and taking trades to try and make me money. And we're going to start tomorrow's Make Hogue Money. Wednesday, Make Hogue Money from 2 to 3 in the afternoon. Make Hogue Money is usually right after the forecast on Tuesdays and Thursdays. Wednesday, we're going to start doing it late, and next week we'll be doing it on Monday late, Tuesday early, Wednesday late, Thursday early, and nothing on Fridays. So I'm looking forward to adding that, and hopefully you're going to find that, again, helpful and interesting. Yes, we do have group coaching today, Joe. We do have group coaching today. I'm going to put the link in, if I can find it here. Group coaching. Here's the link so you can get registered for group coaching. That's today at 1 p.m. Central. Looking forward to it always. I know I learn more probably than you guys do, but bring your questions. If you have a question, you can give me a chance to prepare for it. If you email that question in to jhoagland@topstep.com, I can prepare for that question, and we look forward to seeing you there. ZK, I got my weekly kickoff email. ZK, try and look into your spam folder or any of your other email folders. You should have gotten it. I know that it did go out. All right. Let's see. Good morning to everybody. Caprice, first in the room again. You win the prize. Brody, Dark Heaven, Jules, Serenity Trader, Joe, Tachyon, Rusty Golfer, Dan Trader, Vince, good to see you this morning. Shaw, Sonny, Joel, The Rooster, JST Wave, Terry King, Zuraid, Jan, JD, Orion, good to see you. Unicus with his quote for the day. Good morning, Unicus. Always a pleasure. I love that you keep putting these in. Keep ignoring feedback and life will keep teaching you the same lesson. Really an excellent quote. We truly appreciate all feedback and constructive criticism here at Topstep. Personally, I like to get some feedback and constructive criticism. If there's something we're missing here in the forecast or any of our other online events, let us know. You can always, if you like what you're seeing, tell all your friends. If you don't like it, tell me, jhoagland@topstep.com. Thank you again, Unicus, for posting those. I know we all really appreciate them. My brother Rick is with us this morning. Good morning, Rick. I love you. We went for a nice ride in his convertible yesterday. That was a lot of fun. I really enjoyed that. Thank you, Rick. Haggle Matters, Trading Research, Glitter, Sandwich, Kyle, John Doherty, good to see you this morning. Naztic, good morning. There's a new name. Welcome. Ray Trondy, my wildebeest trader. I know you're sitting right now in the field behind a bush, just looking for some sort of three-legged wildebeest to come by so you can take care of it. Yes, again, group coaching today. Sarah Hall, good morning, prayers and love to you as well. Jimmy Decker, good morning. Joe, could you please share the link for registering? I shared it right there. Patrick, late but here, good morning all, good to see you. ZK, anyways, Rob T, Steve, did not get it. I got it yesterday, so it looks like a little bit of question as to how that went out. I will make sure and ask and see if there were some issues with JD is going to check and see if you got the weekly kickoff. Thank you, JD. John Doherty, the Dancing Bear. Kevin Guy, good morning. Thank you, John Doherty, for taking care of that. Dimitar, Columbus, ZK, Dr. VJ. All right. Looks like the whole gang is here. We're going to jump into the charts real quick here. We do have some interesting situations that may provide good context and nuance in the equities this morning, maybe in some of these other markets. Let's go ahead and jump in. I'm going to start, as usual, with the daily in the E-mini S&Ps. Maybe we'll see some opportunity early in crude oil because that market is certainly going to be opening out of balance today. So let's go ahead and jump in, take a look. Here's the E-mini S&Ps. So volume and open interest remain healthy to the downside. On Friday, we added 30,000 contracts on this push right to the weekly kickoff level. It did not close below it, so that weekly kickoff level remains, I'm hoping, supportive, but at the very least an opportunity for us to limit risk when price approaches that level. We did not close below that 3,600 level. It still seems like a vital level for a bottom or a continuation level. We did last night put in a new recent low in the overnight or extended trading hour session. Last week, we did it on Wednesday. It took till Friday for us to take it out in the regular trading hours. But whenever we leave these lows or highs, recent lows, all-time highs in the overnight session, the market has a tendency to go revisit those levels in the regular trading hour session. Right now, the market's heading in the opposite direction. We've got a little bit of relief from the breakdown here. What are we looking at as far as nuances in the short time frame here? Yeah, I read that there was an emergency Fed meeting, and I don't think it's an emergency. I think it's just a regular meeting that they're having. And of course, they will be discussing rates, not discounting the fact that something could come of it. We've got to just keep ourselves protected, right? So always using stops. All right. So here's the 30-minute in the S&Ps. We have a late spike. We had a late spike on Friday. The base of the late spike, 36.13 even. We're above that. The start of the late spike, 36.32 even, which is right about up here. That's where the start of it is, right up here. And we're opening above that. So the basic rules of the late spike. When we have a late spike and we open in the case of a downside late spike, if we open below the late spike, that's the highest probability of acceptance of lower pricing. Opening in the late spike, less of a probability, but still a good probability of accepting lower pricing. Opening above a late spike to the downside, it marks rejection of lower pricing. We've got weekly kickoff low that we could not close below. We did put in a new overnight low, but the market is opening above the base of the late spike and even above the start of the late spike. This is marking rejection of lower pricing. Why? Well, maybe we got a little bit too short. We did add another 30,000 contracts and open interest to the downside on Friday, looking at what the open interest did last week. In large part, there was a pretty big addition to open interest on a move to the downside, which is healthy for the auction to the downside, but sometimes it gets us a little bit too short. So are we looking at a rejection of lower pricing because we got too short? Or is this going to be some kind of a low? I'm not betting on the fact that this is going to be a low. There's so much information and uncertainty still in the marketplace. And now we've put an overnight low we've put a recent low in the overnight session. Again, I don't expect this area down here to hold. I'm looking for a test of it in regular trading hour sessions, and that may mean final acceptance below weekly kickoff low 3,600. A lot of eyeballs, a lot of people talking about that number, even if it's just a big fat round number. Well, why would they be talking about that big fat round number? 3,606 is 25% off the all-time high. And it's a big fat round number. And it's right near last week's low. So, if we're going to be looking at spike rules, we're looking at, if the market opens above the base of the late spike, we're looking for opportunities to buy weakness. It seems hard to say. But if we're trading what the market is telling us, the late spike can be a really useful nuance for this reason. We're opening in range and we're opening in value. I'm not looking at this as a very important day to get into the market early. As you all know, Mondays are usually not my best days. So I'm going to be patient. We're in range, we're in value. If I think we're rejecting prices lower, I'll start to look to buy weakness. If I think that we're going to be putting in some sort of a high today, which is entirely possible if we were to just take this trend line right here, we've got 1, 2, 3, 4 points of contact. 1, 2, 3, 4 points of contact. Lower highs, lower lows. The short time frame structure is still to the downside, as is the medium time frame structure. So lots of cognitive dissonance in this market here for me this morning, isn't there? So overnight inventory is a little bit to the long side. We've got an important inflection level down below. The question then becomes, are we going to reject lower pricing and continue to push higher, or are we eventually going to accept lower pricing, move down below weekly kickoff low, and then continue to the downside? Only time will tell. It's like watching the market turn. As the market turns, will the S&Ps move higher? Will they move lower? Where is the opportunity? Well, I think we're getting a little bit of information with the rejection of the late spike, at least early in the session and early in the week this week. Anything, as we all know, can happen. Crude oil. So we've got some fears of fundamental tightening. It's got price testing a previous weekly kickoff high here. Okay, 83.75 was last week's weekly kickoff high, or 83.70. So where did we get to? 83.87 before we pulled off. There is a potential for a market state change if we can accept above this level and then get above this week's weekly kickoff high, which is 87.30. Then I think we may really be into something where we may see a longer time frame market state change. This needs to be moved. That's an old contract. Okay. Last week, the rallies were hollow. We lost open interest on all the upside moves last week. That tells me that those were hollow. Okay. That's going to make last week's weekly kickoff high kind of pivotal. I thought about leaving it there, but with this fundamental information, it's more of a shadow than a hard line. We had an increase in open interest on Friday of 7,900 as the market continued to try to push lower. It's making me believe that we've got some medium time frame speculators stuck short. I think we've got a bunch of traders that are stuck short coming into this week, and I'm going to be very cautious about looking for opportunities to sell this market. We've already had an opportunity, I think, here at 83.70, last week's weekly kickoff high, to look for an opportunity there. But if we can't hold below that, I don't think it's going to be a far stretch for us to get to this week's weekly kickoff high of 87.30, especially knowing the potential cutting of OPEC production by up to or over 1 million barrels per day. I think we got some trapped shorts here. What's it look like on the 30? Well, the settlement is all the way down here, 79.47. We've got overnight inventory that is heavily to the long side. Now, this could be some of the shorter time frame speculators who are holding shorts, some of your swing traders, some of your medium time frame shorts looking to bail out early this week. But this is, we've got quite a gap here. We did close the gap to last week's high already, but just looking at this, it just seems as though there's a little bit of a change in personality here, and I'm going to probably be looking for opportunities to buy weakness as long as we can't close the gap. Even if we can close the gap, this area might end up being somewhat supportive. So, last week's weekly kickoff high is finding resistance in the extended trading hour session. If we can't get up there, we may see a nice pullback for an opportunity for a long at better trade location. Again, we've got a gap. Gap rules. If we can't close this gap relatively early, we're looking for opportunities to trade in the direction of the gap, which would have us looking for opportunities to buy weakness. Weakness. Silver to the moon. We're going to check that out here. Let's take a look at the Nasdaq, and then we'll move on to gold and silver. Oh, silver. Away. Open interest lower yesterday, or I should say Friday, where the S&P's added open interest. Year low, 11,000, weekly kickoff low, still intact. We didn't even get to it on Friday. We looked below it. We do have an overnight low, recent low, similar to the S&Ps. We've got this 35% pullback that we basically traded almost right to. We went 8 points down below it and then found buyers. Again, I don't even know what to say, because the Nasdaq and the S&P are the same asset class, but they so often present different information. We lost open interest in the Nasdaq, and considerable amount, 4,800 on Friday, where we added 30,000 in the S&Ps on that move to the downside. So, this looks like a hollow break. In the S&Ps, it looks like a strong break that may have trapped some shorts. We do have a late spike again here in the Nasdaq. Here's our late spike. The base of the late spike is 11,086, right about here, opening above it. The base of the late spike is all the way up here, 11,148. So opening above the base of the late spike is basically rejection of lower pricing. The start of the late spike may offer some resistance. So the base again, 11,860. It's where the market really extended the range to the downside in the last 30 minutes and then closed down there. It didn't have time to mark acceptance in the daytime frame. So we look at where the market opens in the following on the following session. Late spike, opening below a late spike to the downside is the highest probability of acceptance of lower pricing. In the late spike, second, but still probable acceptance of lower pricing. Opening above the base of the late spike, the least probable of accepting lower pricing. Again, anything can happen. Lex Trader, a late spike is based off of the TPO charts. I'm going to show you right here. So this is the range from Friday. At the end of the day, the market extended the range considerably and then closed in that late spike. So you can see that the market spiked lower and closed there. Settlement was 35.50. So right about here. So where the market moved lower and closed. Didn't have the opportunity to show over time acceptance of lower pricing. Last night we extended the range lower. It looks like it's accepting lower pricing in the overnight session, but now it looks like we're going to be opening above the base of the late spike, which again is right here, 11,086. So if the market can't open in or below that late spike, it might be telling us that it's marking rejection of lower pricing and maybe heading higher. And the base of the late spike is right up here. So we're kind of in limbo here. We're looking at possible rejection of lower pricing, but we want to see this market stay above the base of the late spike after the open and take out the high of the start of the late spike, which again is 11,148. All right, so the late spike offers context in showing acceptance of lower pricing or rejection of lower pricing. Here's gold. We lost 1,800. The last 2 days, Thursday and Friday, very indecisive days, basically dojis. No real directional activity from either of them. We are back in the area of balance that we broke out to the downside. Now we're kind of back in it. This might be a little bit gooey here for us. Market seems indecisive. Do we have a bear flag forming here? Let's take a look at this on the 30. So this, I moved that so I could put more stuff on the charts, but this is in essence the area of balance that we left and now we're back inside of. We found support at the base of this level. We're still holding inside what we would call a bear flag. Nice opportunity up here near the high on Friday, near the high of the upper trend line of this channel. We're just kind of hanging out. We're in range. We're in value. Stay patient. My focus is really going to be on this trend line for opportunities and possibly this trend line for opportunities. I'm looking for this market. If it does break out below this trend line and accept in regular trading hours, not overnight trading hours, regular trading hours, I'm looking for this market to continue its move to the downside. Here's the silver. Look at that. This is the daily in silver. Nice move to the upside. Rick, I'm sure you're happy about that. To the euro. All right. Bear flag. Good volume on the bear flag, but losing open interest. We lost 1,000 in open interest on an attempted overlapping to higher range. We do have some pretty decent potential for a breakdown below here. If we get some legs back under the dollar, I can see that certainly happening. And look where we are. So here's regular trading hours. 1, 2, 3. 1, 2, 3, 4. We've broken up lower, but we're not really finding momentum here just yet. We have overnight inventory to the short side. You know, if this were a true breakout of a bear flag, I would be looking for additional momentum to the downside. So I'm a little bit cautious with continuing this market to the downside. 10-year. Okay, well, we got balance here. 1, 2, 3, 4, 5, 6, 7. We've shrunken that balance over the last couple of sessions. This area that this market is in right now looks like a very, very important level for us to be looking for opportunities. It's 1, 2, 3 highs. If we accept above it, there's space for the market to continue the move to the downside, to the upside. But it almost seems like it almost can't happen because we know rates are going higher, but that doesn't necessarily matter. I think, the market is still pricing in the future in rates. So we've got 1, 2, 3, 4 important inflection level here. Last week's high looks like it's a really cool level to look for an execution. because we can limit risk. If we find ourselves short up against it and we see that the market has pushed higher on some momentum or some volume or participation, we're not going to lose a lot on that. And if we do accept above this level, we know that there is some considerable space for this market to continue a move to the upside. You're going to be looking forward to seeing what happened in this market today on the recap at 3 p.m. Central. I don't really trade it, but it's in an interesting spot. So we've got our head and shoulders here on the natural gas. Took a little break on this move to the downside, but we've broken out below last week's low, broken out below the area of balance that was created last week, and I'm looking for this market to find new sellers, new business to help us push this market to the downside. Friday, we lost 1,700 in open interest. Just seemed like a day where there was almost a whole week where there was an inventory adjustment, flattening inventory if we were too short. I don't think we're too short to make this market move lower, which it already is. Here's the natural gas, last week's low, range, overnight inventory to the short side, but could still continuing to one time frame lower. I don't want to step in front of this, but if I'm looking for shorts, I think I've missed the best trade location of the day. Now, again, anything can happen. Anything can happen with OPEC, with weather, who knows what can affect this market. Technically, I believe it is still ready to finish the measured move off of this head and shoulders. So we've got a full week ahead of us. It's only Monday. Take your time. As I've mentioned a million times before, Monday mornings are typically not my best day, although I've had a couple of really good Monday mornings of late. So I'm going to keep saying that. Monday mornings aren't my best day, and maybe that will help me get on the right side of something. Again, look for an exciting announcement about the Topstep program this week. Your funded traders are really going to like this. I can't say anything else, but you're going to find out very, very soon. Looking forward to group coaching today and then again for a recap at the end of the day. Keep praying for peace and safety, and be good to yourself. Let's take our deep breath. Stay humble, grateful, and creative today. Make sure you keep your ball of clay centered. Keep yourself centered. If you find that you're getting your switch flipped, you're probably better off walking away and letting go of that venom before returning back into the markets. So, yes, practice discipline. It's something that's a muscle that the more you work it, the better you're going to get at it. All right? Oh, I was gone for a second there. All right, get out there and trade well. Looking forward to seeing you for group coaching, and keep your eye on your emails. Trade well today. We'll see you later. I'll see you in the proverbial pit in a couple of minutes here. Get out there and profit. Trade well.